When I started Airbnb investing, I was chasing the dream of financial freedom. Quite frankly, I was just sick of working for people that didn't really care about me. I wanted passive income, financial freedom, and properties that basically paid for my lifestyle. But here's the reality. What you see online doesn't always match what it's like to actually have to manage the cleaners, the communication, the amenities that are breaking down, and the asshole guests. I'll say it because sometimes they are. My name's Matt, and I turned a $30,000 investment in real estate into a $10 million short-term rental portfolio. Listen, I know a lot of you have heard about all the Airbnb arbitrage. I don't do any of that. I buy my properties, and I scaled from one Airbnb property all the way to 32 Airbnbs owned. Along the way, I've coached over 200 people to help them get started in building profitable Airbnb businesses as well. In this video, I'm sharing 5 hard lessons I wish I had known or understood before I had gotten started in Airbnb. Whether you're thinking about jumping in or scaling up, this could save you months of frustration and make or save you tens or even hundreds of thousands of dollars. So hopefully this is helpful to you, and let's get started. Number 1, profit over occupancy. Why 60% is sometimes better than 80. So let's run the numbers. When you have an Airbnb, you have things called turnovers. That's when one guest leaves right before another guest comes. What has to happen? The cleaner has to go in there, wash all the sheets, make sure everything's tidied, wipe down, all the surfaces are sanitized. That's the kind of thing. And when those turnovers happen, they're not cheap. They have to happen very fast. So for this example, let's assume that the cleaner is charging you $200 per turnover. And let's say that we're charging an average of $250 a night for the stay at your property, and throughout a month you're getting about an average of 80% occupancy. So over a 30-day month, you're booked 24 nights. And in this example, you're spreading that across 6 stays. So you had 6 guests this month. So what's your gross revenue? It's 24 times 250, which gives you $6,000. Your cleaning costs are simple. It's 6 turnovers times 200. So that's $1,200. So what's your net revenue? It's $4,800. Now, of course, you have utilities, you have a mortgage payment to deal with, but we're just using this for example for right now. Now, adversely, in the point of proving whether 80% or 60% occupancy is better, we're going to go to the next example, which goes over the 60% occupancy. But here's the difference. Usually when you have less occupancy, you can usually get away with charging a little bit more per night. So let's say you're charging $300 a night, but you're getting 60% occupancy per month. This is adding up to 18 nights booked and 4 total stays. So the gross revenue will be simple for this example. It's 300 times 18 nights, which gives you a total of $5,400. Now the cleaning fee is still the same. It's $200 a pop, and you had 4 of them. So that's $800. Your net revenue is $4,600. While the 80% occupancy option is netting you $200 more per month, it's also 50% more turnovers, which means you have 50% more chances of one of those guests screwing up these sequential guests. Yes, some of these guests are the worst, and because they leave houses extremely messy or they do something damaging, sometimes that can eat into your potential of getting the next guest in there easily without doing a lot of repairs. So sometimes having less guests and less occupancy can actually make it easier in the event you have shitty guests. And guess what? It's going to happen. Now, in the grand scheme, I'd say it's probably less than 1% of the time based on the over 2,000 nights of bookings we've had. But it's good to know that. So the 2 key things I want you to take into consideration here is, although it's $200 more in the 80% example, there's less wear and tear and fewer headaches. Fewer headaches can be less communication, less turnovers, less check-ins where they're going, I'm at the front door, I swear, but they're actually at the side or the back or the neighbors, which is also very confusing. When you factor in those hidden costs like the stress, the time, the mess ups, and trying to tinker and figure out what's going on and what's wrong with the property, when sometimes there's nothing wrong with that, but there is something wrong with the guest, sometimes it's better to have fewer guests. There's definitely an argument for it. So the big takeaway here is simple. Sometimes fewer guests means more profit and less headache. It is what it is. And just so you know, there's tools like Price Labs and Wheelhouse. We prefer Price Labs. Those are in the description, and they can help you find the sweet spot for where you should be pricing your property. Now, mind you, tools are tools. The tools don't know your property. So you still need to apply your own nuance and understanding of what your unique property is. And all properties are unique, even if they are crappy properties. I promise you that. Number 2, location is king, but sometimes amenities actually steal the crown. Now, I know we've heard a bunch about amenities, and I'm not talking about the typical amenities. There's more to amenities than amenities, hot tubs and pools. There's more to it, game rooms, whatever. There's also the feelings of cozy and marketing and comfort and ease of access and a well-stocked kitchen that really can set your property above and beyond, especially if you took the photos to show how well-stocked it is. Because believe it or not, there are some chefs out there that will only stay at properties where they've actually pictured all the cutlery and all of the dishes and all of the pans, and they can see that there are really nice quality pots and pans that they can cook with. It's no secret that location is the top dog when it comes to real estate and hospitality. Additional factors can be the proximity to attractions, restaurants, or scenic views. Many times those things can add or set the baseline for how much success you will have. But here's the truth. Sometimes the combination of amenities, vibe, and size can actually trump the location of a property, and they alone can become the driver for where people want to stay. I've seen properties in less than prime areas that outperform all the hot zone areas because they've made an exceptional guest experience that no other hot zone property can offer. And on top of that, one of the things nobody really discusses is the size and the accommodations. Sometimes the place that has 8 bedrooms and 5 baths is the biggest damn house in the area, and sometimes it's the only damn house in the area, which means what? When you have a group of 5 couples, think they want to stay in the property that's got 5 bedrooms and 2 baths or the 8 bedroom, 5 bath? They're probably going to opt in for the larger, better experience, especially if they all have decent income. They're going to say, I'd rather spend that or put me in a hotel where me and my spouse can have our own bathroom rather than sharing it with a bunch of strangers or old friends that maybe smell or snore too much. Again, this combination of factors can be some of the reasons why these unique or specially built properties can outperform properties that might be in the hot zones where all the demand and data already shows that that's the best place to be. Rarely do I find that to be the truth. I promise you, there's many people that are willing to drive an extra 10 to 15 minutes, sometimes even 30 minutes to an hour and a half to be in a better spot that has a little bit of everything, even a little bit of privacy. Privacy has actually become an amenity. People don't talk about it anymore because at the end of the day, people use Airbnb when they want something unique and special and unforgettable. If you just want somewhere to stay for the night, you'll probably just grab a Motel 6 or a Hyatt or a Marriott, whatever. I mean, think about it. If a property offers killer vibes, great amenities, standout location, great view, it just can accommodate you and your special crew for whatever you're trying to get away for. Maybe it's a special birthday trip, maybe it's a bachelor or bachelorette party or whatever it is. You'd probably take something a little bit further away, a little off the beaten path, than be right in the heart of the city that doesn't really have that special private vibe or that unique experience, right? My point here is sometimes the property becomes the destination over where the city is. And that's where sometimes the amenities wear the crown. The key is knowing what your market is craving. What is it needed? What has not existed? And again, if you're looking for what has not existed and something that needs to be fulfilled, the data, when it's not there, will not show that to you. And that's one thing where people always screw this up. That's kind of a little bonus tip of what number 2 is. Don't be reliant on the data because sometimes you will shoot yourself in the foot when you go, damn, I knew that property could have done well, but I didn't see the data. If only I had built what I believed would have worked. You're probably right. So yes, location will always matter, but never, ever, ever, ever underestimate the power of amenities and the combination of factors that can actually create a property that drives itself. Yes, I'm talking about a self-driving property, but never underestimate the power of the guest experience and the combination of amenities that we've been discussing that can actually win over all of the guests that might be looking to book something special like what you have or will have. Number 3, Airbnb is hospitality first, real estate second. Here's something most investors don't understand. Airbnb isn't just about owning property. It is hospitality. And in hospitality, you're competing with both hosts and hotels. So you need to understand that if you're not matching or exceeding those thresholds of the basics of what those Airbnbs around you and the hotel is offering, you're not going to be that incredible in your competition. You're probably going to have average returns. If you're building something to be average, you cannot expect those average results, right? So build something exceptional to get exceptional results. If your market is oversaturated, you just got to stand out. That means investing in top-notch design, maybe unique amenities like a coffee bar, waffle bar, hot tubs, saunas, cold plunges, whatever you got to do to make it stand out. You need to create the reaction from your guests that make them go, holy crap, what an amazing place. I would love to stay here again if I'm ever in this area. Or I would come back here just for this place because I found it so relaxing and so fun and so enjoyable. If you are creating that, you will create drive. People will tell people about how great the experience was and how great your property is. And that's exactly what we have to do, because if we're doing a great job with our communication, with our cleaning, with our management, and people are saying, oh, the host communicated with us so exceptionally. We knew where everything was. We actually felt like we had excellent guest communication and customer service to the point where we just felt like we were getting a special treatment. That's the hospitality aspect that really is going to sell and draw things in more. I used to think, oh, I just need a property, real estate, with furniture in there, done, and a listing so people can book it. That's as simple as I used to think. And you know what? You probably could do okay with just that. But if you do it at a higher level, you communicate at a higher level, you make sure you're following up, your cleaning team's working with you at a higher level, you will have an asset that will grow with you and it will make you want to scale in this business. And that's the key. You get one or two that are going to kick ass for you. And before you know it, you're at 10, 20, 30, and you're probably retiring. So I want that for you. If you have those questions, you know where to go. Obviously, whatever you do before you buy anything, analyze it, take the data for what it's worth. If it's a bunch of data on mediocre properties, then just understand this is what a mediocre property gets and those are the results. And if you're going to make something exceptional, you know that mediocre result is probably your baseline. That's your worst case scenario. So use that as your launching ground above that for what your property will likely be. And within our description, you can actually find one of the tools that we use, which is AirDNA. AirDNA can show you demand, the nightly rates, the average earnings for properties in the area. And that can usually get you a better summary and idea of what you're getting into. Or if you're going to be pitching this to partners or friends or investors, will also help you get that access to that capital so you can get these things purchased. Hospitality is about creating exceptional value and experiences. And the first step to all that is understanding your market or what kind of market you're trying to drive for. So whatever you do, just know that the hospitality is going to be key to all of this. And for all of the old school long-term investors out there for long-term rentals, I was there too. I always thought, but where's the dollar? Show me the data. It doesn't really work in hospitality. It's somewhat there, but right now that data is still so new. This is why there's still so much opportunity left in the future for us to grow in this industry, because there's still a lot of mediocre, low quality properties out there. And that's part of the reason why Airbnb gets a bad rap sometimes. But the more professional the industry becomes, and what I would say right now is it's in its awkward teenage years, it's going to become awesome and everybody's going to go, oh yeah, that's a great thing to do. I'm glad I've done it. I've used Airbnb plenty of times and I would totally use it again. Number 4, this one's a bit of a pet peeve of mine. A lot of coaches out there will say, scaling requires systems. You got to have your systems. And you know what? You're right. But more than that, profits are what actually fuel the growth. And you know what? When you have more profit, it's a lot easier to scale and put those systems in. So what am I even saying? When you're starting out, the biggest boost to your success isn't systems. It's actually picking highly profitable properties. This is a contrarian point of view, but I think systems and all the tools are a little overkill for your first property. We built our portfolio and we didn't have really any of that stuff until our third or fourth property. And you know how we were able to do it? Picked up the phone. We responded to our messages. We were very inviting. We were very helpful. We made sure that we delivered on a quality property with a quality cleaning team. And overall, things went pretty dang well. Now, as we scaled, we realized, okay, now we do need a VA. Okay, now we do need price labs and a property management software, which we use Hospitable. But either way, as you scale, you don't need to put all of that expense up front. For all the very new folks, the people that are looking to get their first property, just know this. It's probably great for you to get price labs. I think that's going to be a very helpful thing for you to understand. I do think a dynamic pricing tool is always a good start, but I don't know that you need a PMS day one. It's still good to get one. It's probably good to get a VA if you're already a very busy employed person. My point here is sometimes people get so caught up in scaling and they spend $200, $500, $1,000 a month on all these softwares that they don't necessarily need, especially for 1 or 2 properties. And that takes away their profit to make saving up for their second or third property much more difficult. Now, if you just use that money to save up before you know it, you're going to be a lot closer to buying your second. And when you finally have the capital to buy your second and you've bought it, then start implementing all of that. Because frankly, when I started, I didn't need all of that. And there's a lot of other ways to get that data figured out without needing every single one of those tools and all the additional systems and people, especially for just one Airbnb, unless it's like some grandiose, huge thing. Just be wary of that, because I'd much rather see you save $1,000 to $1,500 a month and apply that toward your next purchase. So again, your first property needs to outperform your local competition, both hotels and Airbnbs. Invest in standout amenities, thoughtful design, and an unforgettable guest experience. So once you have that unforgettable guest experience, that's when systems come in. Check my link in description because I have these listed there, but tools like Guesty and Hospitable can automate your guest communication for you, which really becomes helpful as you scale. Then it's hiring the professional cleaners and handymen to make sure that all the nuanced issues on site at your property are handled. cleaned and fixed in a record time. Sometimes those cleanings and those repairs need to happen on the very same day. So you need people that are really nimble and understand that this is a hospitality business. This isn't a long-term rental where you can get to it in a day or two. It's usually got to get gotten to sometimes within the hour. So once you have the people, the process, and the software in place, that's when scaling just gets so much easier. And then you can focus on the higher level tasks like finding your next profitable deal. But remember, it's the profit from your first property that it gives you the foundation to make it easier to scale to your second. So make sure that first one makes some money. Number 5, scaling gets easier and there's more opportunity ahead. When I started with my first Airbnb almost 5 years ago, I thought, man, this is going to be hard. I hope this works. And I had all these fears and worries that it was going to fail, and it didn't. And I said, crap, maybe it'll work if I do a second one. And then I did it and it didn't fail. It did well. I was like, shoot, can I do a third? So I was 2 for 2 on success. Great success, mind you. And I was still putting out this essence of worry that, God, could a third actually work? And that continued kind of into my 5th and my 6th. And pretty much after my 7th or 10th, it was kind of a blur at that point. I just said, what the hell am I worried about? How many times do I have to have success before I trust what I'm doing and the fact that I'm getting smarter and smarter after each sequential purchase? Now, of course, competition did heat up. But even on my way to 32 Airbnbs owned, I still keep finding ways to make more money in areas that nobody else is willing to invest in because I have a special sauce. I have my no data method. I know how to work in emerging markets where I can buy lower priced homes and have exceptional returns that no one else can see until I've created it. Each property taught me something new, good, bad, and ugly. Whenever there was something that needed fixing or streamlining, I just built a system around it to make it a lot easier to handle for the future if and when that issue occurs again. So here we are 5 years later in this, and we've heard about the Airbnb bust and how it's so saturated and it's so tough and it's so hard to grow. And all my properties have failed and it's the Smokies or wherever the hell they're from. But the truth is a lot of those people are investing in areas that are hyper saturated with quality assets. And many of those people entering those markets aren't prepared to drive as fast as those other competitors are racing. I've given that analogy in another video where I talked about the F1 racer. You give somebody an F1 race car and you put them on a track where they've had no experience, they're probably going to crash and burn. They're certainly not even going to place, right? So that's the difference. If you're not bringing that experience and that quality of management and the design, you really don't have any business competing at the F1 level. But even with all that said, across the nation, there's still so much more room to grow, and that's why we continue to buy properties, and we're even scaling into hotels. What I would say is Airbnb is still maturing, and it's still in its awkward high school years, and it's going to get better in its college years, and before you know it, it's going to settle down and have a family, and we're going to know how it turns out, and it's probably going to be great. The market is evolving, demand is growing, and there's plenty of maturing left. This isn't a bubble, it's a long-term shift in how people book how they stay at these special, unique stays that are not necessarily hotels. People are anxious for something special, a place to disconnect and feel some kind of mental wellness. Because these days we're working more than ever. Most of us have 2 or 3 jobs or some side hustles and we're exhausted. So we need something that's going to be exceptional. Let us really feel like, man, I got away and that was such a great experience that literally took me from my 9-to-5 job and put me in another fantasy world that I deserved and paid for. And I'm so glad I went to. And I got to tell people and show people this amazing place. And that's what people want. If you create that, you create what you want, you'll be very happy with the result. I would even argue there's more opportunity than ever because the quality of build outs, the unique stays, the privacy, the views, people are getting crazy about it, including myself and hopefully you. And because people like us exist, we're going to have the most exceptional results. If you're debating whether to start or scale, my advice is jump in. The opportunities aren't going anywhere, and the sooner you jump in, the sooner you're going to have success, and you're going to want to double down and probably 10x that before you know it. So there you have it. 5 lessons I wish I knew before I started investing in Airbnb. And even better yet, you at least have my lessons to learn from so you can start off in a much better way than I even did. If I'd known any of these sooner, I can only imagine how much farther and deeper into this world I'd already be. I could have avoided all of the costly mistakes and scaled much faster, probably have been more profitable. Now that you know, the next step is taking action. I've created a free Airbnb course based on all the lessons and fun that I've had in scaling my 32 Airbnbs. And what's cool is some of my students are going to have record months this year where they're making as much as $20,000 to $25,000 net in a single month. Of course, that's probably July because July is pretty fantastic. But the point is, It's amazing. I want that for everyone because it's a very fun experience. It's an outlet for you to be creative and flex your entrepreneurial dreams and your real estate hopes. So if you're interested in learning how to make an extra $3,000 to $15,000 a month and you want to learn that in the next 90 days, we have something pretty special for you. The link is in the description. Don't wait to get started. And hey, if this video was helpful for you, hopefully it was very helpful, even if it was 1% helpful, I'd appreciate a like, a share, a subscribe, whatever it is. It would be very helpful to us because I've been teaching real estate for 10 years and Airbnb for the last 2, and I want to teach this for the next 20 years. So if you're interested in learning how I do things, you want a coach that's here to stay because I freaking love this stuff. I don't even know how to do anything but real estate. I'm here for you. Just keep following. Stay tuned for the next video. And if you have any comments or questions, shoot them down in the comments. I promise I'll get back to you.